Hello, business owner. You spend countless hours analyzing charts, reading earnings reports, and managing risk in the markets. But while you are obsessed with protecting your downside on the screen, you are likely ignoring the biggest margin call of all, the legal exposure of your personal assets. Trading stocks, options, or crypto in your personal name leaves your entire portfolio, your ticket to financial freedom, completely exposed to any personal lawsuit, divorce, or creditor claim that happens in your daily life. In this video, I am going to walk you through the 10 questions every serious investor and trader must ask themselves right now. And you need to stick around for question number 10 because that is the single most critical question regarding fraudulent transfer that will determine if your nest egg remains safe or gets seized by a judge. I have also placed a link in the description to the formation service I recommend most for investors, specifically because they allow for a very flexible operating agreement, which is essential when your business is managing capital rather than selling goods. Question number 1. Do I really need an LLC if I'm just trading my own money? This is the most common objection. You might think LLCs are only for people selling physical products. That is incorrect. If you are managing capital with the intent of profit, you are running an investment company. By trading in your personal name, you are essentially telling the world, this money is mine, come and take it. An LLC changes the narrative. It moves your assets from your personal pocket into a separate legal vault. It validates that you are treating your wealth like a family office, not a gambling habit. Question number 2. Isn't investing considered passive activity? To the IRS, usually yes, but to the legal system, assets are assets. Just because you aren't punching a clock doesn't mean you don't need protection. In fact, because stock portfolios are highly liquid assets, meaning they can be turned into cash instantly, they are the first target for creditors and lawyers. If you get into a car accident or have a dispute with a contractor at your home, they won't go after your house first. They will go after your brokerage account because it's easy money. An LLC locks that door. Question number 3. What if I trade on margin and blow up my account? We have to talk about the risk of leverage. If you are trading options or using margin and a trade goes horribly wrong, resulting in a negative balance that exceeds your account value, the broker will come for your personal assets to cover the debt. If you are trading as a sole proprietor, they can garnish your wages and place liens on your home. If you trade through an LLC, the liability is generally limited to the assets within that company, protecting your personal life from a bad day in the market. Question number 4. Does my trading activity expose my identity? If you are trading significant volume or dealing with private placements, your name ends up on a lot of lists. As a private individual, you have little privacy. Anyone with a keyboard can find out what you own. By trading through an LLC, especially one formed in a state with privacy laws, you trade anonymously. The public record shows the company name, not your name. This keeps your financial success private and keeps you off the radar of potential scammers and frivolous lawsuits. Question number 5. Can I use an LLC to invest with a partner or spouse? Many couples or friends try to pool their money to trade together. Doing this in a personal brokerage account is a tax and legal nightmare. Who owes the taxes? Who owns the principal? An LLC solves this instantly. It clearly defines ownership percentages through membership units. It allows you to pool capital legally and cleanly, turning a messy handshake deal into a legitimate investment fund structure. Question number 6. Is the cost of an LLC worth it for a smaller portfolio? You might hesitate at the filing fee, thinking it eats into your returns, but you need to view this as a hedge. You buy put options to protect your downside, right? An LLC is the ultimate put option. The cost is negligible compared to the value of the assets you are protecting. If you have a portfolio worth $50,000 or $500,000, paying a few $100s to ensure it can't be seized in a personal lawsuit is the best ROI you will ever find. Question number 7. Is the paperwork too difficult for someone who isn't a lawyer? You know how to read a balance sheet, so you can definitely handle this. Forming an LLC for investing is actually easier than for an operating business because you don't need sales tax permits or complex licensing. You are simply establishing a holding company. The service I linked below strips away the confusion and handles the filing for you. I am going to pause the questions right there. I know you want to get back to the markets before the closing bell, but I want to show you exactly how streamlined this process is. I recorded a quick walkthrough using the service I mentioned in the description to show you that you can set up your investment vehicle during your lunch break. Watch this. Select the LLC option for business type and state. In my case, it's Texas. Choose the options that best suit your business. Add your contact information. You can add the data of a partner or co-owner. Add your business name. Add your business information and click Continue. Then, add your business location. Choose the options that best suit your business. Finally, add your payment information and click Continue. Congratulations, you now have an LLC. That really is all it takes. Now that you've seen the how and you have that link in the description to get started, let's get back to the why, because these next points are about taxes and deductions. Question number 8. Can I write off my Bloomberg terminal or trading computer? This is where it gets interesting. As a casual investor, deducting expenses is very hard under current tax laws. However, if you qualify for trader tax status, which is a specific IRS designation for active traders, having an LLC makes the administration of this much cleaner. It allows you to treat your trading like a business, meaning your data subscriptions, your home office, your seminars, and your high-end computers become legitimate business expenses, lowering your taxable income. Question number 9. Can I deduct more than $3,000 in losses? Every trader knows the pain of the capital loss limitation, where you can only deduct $3,000 of net losses against your ordinary income per year. If you structure yourself correctly as a business and make a Section 47 election, mark to market, you can potentially deduct all your trading losses against your other income. While you don't strictly need an LLC for this election, having one provides the formal separation required to prove to the IRS that this is a bona fide business activity, not just a hobby. Question number 10. Can I move my stocks into an LLC after I get sued? This is the wealth killer. The answer is a hard no. If you are involved in a lawsuit personally, say a slip and fall on your property, and you panic and transfer your stocks into an LLC to hide them, the court calls this fraudulent transfer. They will reverse the transaction and seize the money anyway. The asset protection only works if the LLC is established before the legal threat appears. You cannot build the vault while the robbers are in the house. If you are serious about building generational wealth, you need to protect it with a professional structure. The market has enough risks. You do not need to add legal risks to your portfolio. Go to the description, click the link I've provided, and start the process today. It takes minutes to secure your financial future. My verdict is simple. Trade like a professional institution, not a retail gambler. Protect your capital so you can stay in the game. If you found value in this video, please subscribe, like, and drop a comment below. Until the next video.